Today, we're going to be talking a bit about Australia. I have taken the title of today's webinar from a book, from a very old book. Well, not very old, but an old book, written in 1964 by a man named Robert Horne, titled Australia, the Lucky Country. Since those years, it's almost more than, it's 52, 53 years since then. The title, which he meant to be ironic, much as I have an aversion to irony in discussions of almost anything, has become sort of a moniker. Australia appraised, Australia the lucky country. I was going to title today's webinar as a conflict, and not conflict, but as a juxtaposition, if you will, between another book titled The Fatal Shore, and Robert Horne's book. Let me just find out who wrote that. I sort of forgot. The Lucky Country. What Mr. Horne meant by that book, by that title, was that Australia had not earned its good fortune. It inherited its political system from England, but then so did the United States, and so did many other countries, Canada, New Zealand, and many other countries that inherited part of their legal system. And so that's hardly a reason for criticism. The second is its geographical and its resource endowment. What you're looking at here, let me put up another chart here actually. I hope that the chart is clear for everyone. I'm working on a new video system here for. Well, I might as well talk about that. I'll talk about it in a minute. For a series of interview show I'm going to be doing in conjunction with FX Street in a few weeks. Actually, we're going to start it this week. So I have a new video system here, which is, of course, has to be organized and coordinated, and it's not 100%, but I hope you can see the chart. This is a chart of the Bloomberg Commodity Index and the Australian dollar. Since we're currency traders, we'll look at that first. And you can see the very close correlation, which is putting it mildly. And it tells you, of course, the role, the dominant role of, and I was reviewing some of the literature before I came in here today, and it is interesting how straightforward it is and how upfront it is when it comes to analysis of the Australian economy. Journalists know it, the government knows it, it is very much on the minds of the economic, I won't say planners, but certainly the people in economic positions of economic authority in Australia. The third part of the lucky country idea is Australia's geographical separation. In the late 18th century, when Britain sent its convicts to Australia, it was a penal colony, and that's the fate of Robert Hughes' book, The Fatal Shore, a tremendously good book. One of the best narrative histories of anything that you can read. I recommend it without reserve. He died recently, actually. He was very famous in Australia, an art critic and many things, but it's a great book. It really does get the narrative of what happened, because I'm sure you all know that despite its proximity, globally speaking, to the Asian centers of culture and civilization and governance and power in China. Now, it's not that close to China, but it's a lot closer to China and Japan than it is to England. Yet, in the way of things, it was England that settled the islands, the continental island, and the smaller islands of New Zealand that became countries of Western culture. There is, I believe, a 15th century Chinese expedition. There's an interesting book I read a few years ago. It's rather unsubstantiated, but it's still an interesting thesis. I think it's called 1453. The subtitle is something like The Year That China Circumnavigated the World, something like that. But the thesis of the book is that one of the mid-15th century Chinese emperors, whose name unfortunately escapes me, built and manned a fleet that sailed all around the world. That fleet touched in Australia and went through the Straits of Magellan and back to China. And then in a change of dynasty and a change of policy, all outward contact was stopped, and China once again reverted and became the continental power it has always been. China is currently, again, making another bid for influence in the naval and Pacific realm on its off its southern coasts and well beyond its southern coasts. So there is an interesting bit of cultural history. It was England in 1788 that sent the first fleet, as it's called in Australian history, the first fleet to Botany Bay. It was England that colonized Australia. Australia was not an empty country, but it was inhabited at that point only by Aborigines, who, when the English got there, had a Stone Age culture, much as the American Indians did here in the United States when 150, 170 years before, 160, 180 years before that, in 1609, the first Western colonists came to Virginia and Jamestown and thence to Plymouth Rock in Massachusetts. The culture here was a Stone Age culture. There had been some contact here in the United States from the Spanish in the Southwest and in Mexico, but not really enough to change the culture across the country. It was very sporadic. The Spanish did not have a lot of influence or trading influence throughout North America, such as the English and the French did when they finally came. But yeah, as it may. So it was the English and English culture and English political mores which settled Australia and New Zealand. Hence, Mr. Horne's political epithet, the lucky country. The geography is the same issue or the same idea. It was and is, and certainly in the past 30, 40 years, as China has moved from communist economic incompetence to a much more efficient, productive, competent capitalist economy. I realize there are certain caveats with that should be expressed, but since they all tend to the political, I will actually let it go and simply call China a capitalist economy. It's not quite, but it's pretty close. And in its productive capacity and in its ability for change and innovation and movement, economic movement, it certainly is, exhibits every trait of a dynamic capitalist economy. So in the past 40 years, Australia has also been lucky. It has been the resource provider for probably the greatest national economic boom in global history. That, of course, has been the rise of the Chinese economy and China to the second largest economy in the world from nowhere, or from a very, very low base. And the third, of course, is Australia's resource bounty. China has a lot of coal, but it doesn't have a lot of iron ore. It has certain minerals that are very useful, the rare earth elements, and it controls others across the globe. But the basic productive capacity of a country, certainly an industrializing country, is based on, if you will, 19th century technology. Coal, oil, iron ore. These are and China is self-sufficient in foodstuffs. These are the ingredients that China has utilized and Australia has provided. So Australia's status as lucky country probably became a straightforward compliment, despite what Mr. Horne had intended. His intention was critical, meaning he intended to criticize Australia because it did not have to work hard to develop into a modern industrial country. I would beg to differ with that. And I would also say that the evolution of the title since 1964 would show that many people, that general culture, has not accepted that particular thesis of Mr. Horne's, that Australia is, if not undeserving, it's certainly simply lucky. Australia has never had a war on its soil. It's a little different for New Zealand, because New Zealand was populated by the, not the Samoans, what's the national tribe? And let me check it out for you. In where there were, much like there was in the United States, a series of conflicts between the native peoples, who were quite warlike, and the settlers in New Zealand. Hang on one second here. I don't want to let that go. For once, Google got the spelling wrong. How about that? Yes, of course. Now I remember the Maori. My apologies. Okay, so we should be here on our, okay. The Maori. My apologies for the delay in there. So neither country has ever had certainly a modern industrial war on the country. I don't know the history so detailed of the settlement of New Zealand, the two islands north of South Island, and how bloody or not the conflict with the Maori was. But certainly Australia and New Zealand have never experienced the type of warfare that has been endemic throughout human existence. Canada is another country that has never really had a war fought on its soil, except for the French and Indian War, which the major battle was the siege of Quebec with General Wolfe on the British side. At any rate, so I don't see why you couldn't call Canada the lucky country as well, except that they never have. That has many of the same ingredients and inherent, and in fact, it's probably the same. Maybe it's because it's not so cold. I mean, it is cold, and it's not so cold in Australia. Canada's beneficial status, benefited from history. The same, inherited a political system from England, one that I would say is probably its descendants are the best and the most proven on the planet. I might get arguments about that, but I would certainly be glad to take those arguments up. A fantastic resource endowment and a proximity to a very dynamic and powerful economy to which it has for many years supplied resources and to some degree a manufacturing base as well. So there are very many similarities between Canada and Australia, but we're on Australia. One interesting note on the Australian economy, a number of the articles and things that I read in preparation for this, we're talking about how long it has been since Australia has had a recession. The Australian economy, let's get another chart up here. Where's the all ordinaries? Bear with me 1 second. That's not what we want. Cash target. Okay. I put that one up. In the transfer to the room here, I'm in a separate room from where my desk is. I may have missed it. So if that's the case, I apologize. Okay. This is what we'll put up here. This is the Australia. No, I had that one up already. Sorry, folks. Oh, I know what to do. We'll use the all ordinaries. Okay. The Australian stock market is called the all ordinaries. I don't know the derivation of the term. Okay, so here we have the Australian economy, which is the all ordinaries in orange, and the Bloomberg Commodity Index. These charts, by the way, are from Thomson Reuters. We have switched our information provider at Worldwide Markets. And by the way, there's an interesting article last week in Reuters, if anybody saw it, about the potential for a change in the regulatory environment here in the United States. I mention, among other reasons, because it's an interesting prospect and also because I'm quoted in it a number of times. But there is a certain possibility for a change here in regulatory environment and the restrictions that have been part of the Dodd-Frank legislation and several other things coming out of the CFTC. It's interesting because there was a trade show here last week, the New York Traders Expo, and I went down on the last day. And one of my purposes was to speak to some of the representatives from the NFA and the CFTC, what their view on this might be. And I got some interesting points of view, particularly from the CFTC, which is actually the regulatory body, as to how this may evolve over the next few years with the new administration here in the United States, and with a very particularly different view of regulation, what its purpose is and how to go about it. So we shall see. But it is a possibility that the market in the United States could change, shall we say, in the next 2 years. We shall see. So back to Australia. So Australia's economy has not had a recession in more than 25 years. Now, actually, I was looking at that, and there was a bit of a consternation in Australia because the third quarter, they actually had a negative GDP, 0.5. Used the traditional recession determiner, 2 consecutive quarters of negative GDP, and you have a recession. Okay, so in the third quarter, the Australian economy shrank by, I think it was 0.5%. but it rebounded in the fourth quarter, which just came out actually to 1.1% positive. So Australia again avoided a recession. Now it's been 25 years since Australia had a recession. That's quite a run. It's certainly nothing that's something that very few other countries can claim. The second longest, I believe, is Poland, which also has not had a recession in about 20 years or 21 or 22 years. So we have an interesting proof, if you will, of the resilience of the Australian economy. When everyone else, except for the Chinese, and there you have the key, pretty much everyone else was plunged into recession after the 2008 financial crisis, China pumped up its economy, spent $1 trillion or more dollars, and what did they do? Well, they built things and built factories and products and other things for which Australia supplied many of the natural resources. And that kept the Australian economy, surprisingly enough, or perhaps not surprisingly, but considering what's going on in the world, from slipping into recession during and after the financial crisis of 2008. Now that's quite an accomplishment. Again, sort of a lucky development. But it is true that the Australian economy and its success is a resource-based economy. It's not as monoproduct as, say, some of the countries in the Middle East are, with their dependence on oil, which is slipping away. But it is most assuredly a resource-based economy. Now, this is an interesting division, because look what we have here. This is the All Ordinaries, the Australian Sydney Stock Exchange. And the purple line is commodity prices. And you can see up until right here, which is about the first quarter of 2013, the correlation between commodity prices and the All Ordinaries. It is astonishingly tight. Yet here, it diverges. And we have to ask ourselves, and I'm not sure there's a very good answer for this, what changed? The Bloomberg Commodity Index has been on a decline. It was at a slight recovery in 2016, but has been on a decline. This doesn't qualify, in my mind, this decline, but certainly this decline and this recovery does not qualify as a recovery in commodity prices. It's simply a speculative, let's take some profit, reversal in the commodity pricing. So we have a question that I'm honestly not sure there's a good answer to. Because when you look at the world's other stock markets, they've done exactly the same thing. There's been little growth, certainly not the kind of growth to sponsor, and you can look at the American Stock Exchange, you can look at European, you can look anywhere you want, really. There hasn't been the kind of growth economic in Australia or anywhere else to promote the bullishness in the world's equities. In fact, it appears that the commodity prices are predicting something else. Now, of course, commodity prices are a double-edged sword, or at least the causes of commodity price movement are a double-edged sword. There's obviously the supply side and the demand side. The supply side has boomed, meaning that many more resources were developed over the past 10 years, which remain online or in a very briefly mothballed state to return to the market. So that certainly has kept commodity prices lower. The U.S. shale business is a perfect example of that. The U.S. Is, I believe, the #2 producer now in the world. I think Russia briefly became. I don't know whether that's measured. I assume that's measured by extraction, by barrels and extraction. So here we have the split. Now, this is the same split that we have in all other markets. So let's take a look. Where is my... Hang with me for 1 second. Like I said, I'm running on a new system here, and it's not... Oh, here it is, cash target. Okay. Okay. Now, I don't have the all ordinaries on this one, but we have the RBA cash target rate. It should actually be continued a little bit further there. We have the Australian dollar, and we have Bloomberg commodities. Now remember, let's take a look at it, the boom in the all ordinaries, where it diverged from commodity prices, we can say where the lines cross right here, in the first quarter of 2013. First quarter of 2013. Now, first quarter of 2013. So right about here, the all ordinaries went up and has largely continued up, and the commodity index, if you will, the basing for prices and for the health and success of the Australian resource economy, continues to decline. Yet we have a rise, a huge rise in the all ordinaries. Now this is constant with, in my mind, lest we forget, what was going on in those days. Ah, yes. Have we forgotten Mr. Bernanke in quantitative easing, which became very popular all around the world, although the Australians did not indulge in it as far as I know. They certainly did in Japan. And they've been doing it actually in Japan for years, although they're just calling it something else. The United States, the Europeans became involved later on. So certainly some of the worldwide, the global, at least industrial global boom in stocks, in the face of declining economic growth, of declining economic performance, and the indicator of that we're using today is declining commodity prices. So that is part of the puzzle of why would equities go up all these years, past 4 years now, with a slowly growing global economy. And so that's part of the answer here. But again, for this period, the Australians, despite the decline in commodity prices, avoided a recession. This is a rather serious accomplishment. Again, but it's not one really that Australia planned for, or Australia gets a great deal of credit for. You know, that's why Mr. Horne, that many years ago, was saying, well, it's a lucky country. They didn't plan to do anything on this. I don't know if I agree with that at all. Okay, so here we have the Chinese yuan and the Australian dollar. There isn't, surprisingly, or perhaps not surprisingly, a great deal of correlation here. There is rather, so this is the yuan, and this is the Australian dollar. Let's look for more correlation. Okay, so we have here the one I just showed you. the Aussie, purple, and the the Bloomberg Commodities Index in purple and the Aussie in the orange. And here, despite the fact that the chart moves, we have and continue to have a very tight correlation. So the Australian dollar is telling you that, and now of course this also agrees with the decline in Australian interest rates, which we look at here. They peaked in 2011, and they really started to go down in the beginning of 2012. Okay, so let's look at that, the beginning of 2012. Okay, so we have the beginning of 2012, right about here. So that certainly was not the decline in this decline right here. This peak and decline right here is not really related to a change in the Australian cash rate. It is much more closely tied to changes in the commodity price index. So for all the analysis that one reads or does not read about the Australian dollar and trading the Australian dollar and what is the Australian bank, I believe they have another meeting. They have another meeting this week where they're expected to not to change the 1.5% cash rate. It's not the cash rate that's having the greatest or the tightest correlation to the value of the Australian dollar. It is the commodity prices around the world. And so all of the analysis that one can do on an economy, and you can, of course, as with any other modern industrial economy, a plethora of figures that come out every week. You can get lost in them and assume that there's meaning there. And there is. But when it comes to market interpretations of the data, for Australia, you can certainly stick with the Bloomberg or any other commodity index, primarily the Bloomberg Commodity Index. Okay. Let's see if I have a, oh, this is the 20-year chart, and this is the 10-year chart. And again, whatever detail you want to look at in the chart, oh, we can do that and take up the whole screen. Cool. How about that? The correlation is unmistakable. So the next question that has to be asked about Australia is not strictly about Australia, of course. It's much more strictly about commodities in China. Let's look at the Aussie and the Chinese yuan. I take the trading level of the yuan as the best indicator of what is happening in the Chinese economy. China has a couple of problems. I mean, it has a problem of capital flight. It has I was actually on CNBC recently and last week. And the topic was Chinese currency devaluations and basically the Trump administration, whether or not China would be declared a currency manipulator. By the strict standard that the Treasury, by the standard the Treasury uses, there has to have been I think they actually had numbers on it, a 2% use of resources, 2% GDP, I think, had to be devoted to devaluing the currency, and kind of an absurd standard. It's certainly not true of China over the past several years, the past 3 years, you could say, and a little more. Because during that time, China's been intervening to prop up its currency rather than to devalue it. It's market forces. And, well, let me backtrack on that. It's not quite market forces. This is the period, this is the Chinese yuan in the yellow. This is the period of around and post the financial crisis and the recession. And that's a definition of a managed currency right there. Letting it appreciate and then having it depreciate. And you'll notice that we're back to a similar level as where it was back here, a little bit weaker, but not much, when China was last seriously worried, the Chinese government, about its economy in the aftermath of the financial crisis and the recession. And we're back at that same, more or less that same level, a little bit weaker. So this is telling you the reason the Chinese are and have been intervening, basically managing the currency so that it doesn't get too weak, is because they also don't only have problems of overdevelopment and exports, which their economy depends on. They have problems of capital flight. And if the yuan is allowed to devalue too quickly, then it will tremendously exacerbate the problems of capital flight. And I don't just mean companies trying to get profits home before their profits diminish by 10 or 15% because of the devaluation of the yuan, but actual capital flight as in money leaving the country that has been earned there or amassed there for the same reason. You have read a number of articles, I'm sure, and I have, about Vancouver's property boom and, you know, journalists blaming it on the influx of money from China looking for hard assets to invest. So in a strict sense, China has not, in the treasury sense, China has not been manipulating its currency by the definition of the treasury to force it lower. On the other hand, why is the yuan declining? Why is China engineering this move? And the strict sense that it doesn't meet the criteria of what the Treasury, U.S. Treasury Department has laid out, hardly answers the question whether China is manipulating its currency. There is no question about it. China does manipulate its currency. It does manage its currency. Left to itself, what would have happened from here on? Most likely, the currency would have continued to appreciate. Because whatever you want to say about the Chinese economy, it is nonetheless growing a good deal faster than any other industrial economy on the planet. Currency markets will take that into effect, and they will probably continue. So this is a managed. One of the person that I was on with said that China's not manipulating, and I disagreed with that. And I also disagreed with the purpose of our government's, our current administration's point in highlighting this. But this is clearly a managed kind of. What does it have to do with Australia? Well, I've used for a long time as the trading value and more importantly the trend of the yuan as the most reliable indicator of what's going on with the Chinese economy. Chinese economic statistics are in this, I'm sure you've heard this term. It's not a particularly felicitous term, goal-seeked. Actually, it's kind of an ugly term. Just means that when you will have your statistics or your result determined by the goal rather than by any strict gathering technique. So if the Chinese central government has an aim, and China's not the only one who does this, but they do it probably more blatantly than anybody else. If the Chinese government has a 6 or 6.1 or 6.2% GDP goal, which they announce, then lo and behold, all of the GDP figures from everywhere come in to be about 6.1. The bureaucratic intent being dominant to get the figures back. So this decline in the yuan is telling you two things, and both of them are pertinent for Australia. One is that the Chinese are concerned about their economy, because otherwise they would not be devaluing the yuan. Devaluing the yuan can provide their export industries with a fillip, with a boost. It will keep workers employed. We've discussed China's sort of domestic internal political history in relation to this. It will keep people off the streets and employed and from going back to the rural areas where they can make trouble. But it also means that China is quite aware of the overdevelopment, of course they are, of the overdevelopment of their industrial and resource sectors, primarily their industrial sector. So it is a warning, especially if this, I mean, the pattern here is uniform, up, down, and then up again. And once we get past 2015, the return to devaluation is always at a higher level, a much higher level than where it left and stopped the rise prior. So far, that hasn't happened here. But if you look at the time frame, here we have 1 quarter, you could say almost 2 quarters of stasis. Here we, let's say of decline, we have, after it reaches the peak, let's call the peak here, that's 1 quarter, 2 quarters, a little more than 2 quarters before it started up again. Here we have, again, about 2 quarters. I'm talking about from the decline at the top. Here we have 1 quarter. Here it's only 1 quarter. Here also 1 quarter, and then it starts up again. Well, what do we have so far? We're not quite at 1 quarter. Is the Chinese yuan going to start devaluing again at the end of the first quarter? And that's only about 3 weeks from now. I have no idea. But the pattern that we have seen over the past, let's call it 2015, 2.5 years, has certainly been one that at the end of this month, there's going to be everyone should be paying attention. So for Australia, this is of utmost importance. The US economy hasn't budged, right? The stock market is much higher because it's anticipating business-friendly policies from the Trump administration. But the economy itself, except for some sentiment indexes, hasn't changed. China has proven itself willing to spend tons of money. Remember the spike in new yuan loans at the beginning of the year? Tons of money to support and keep its economy rolling. And that gets a response from the Australian economy. But the problem with this is, in some of the articles I read where they were talking about the dependence of the Australian economy on resource extraction and shipping, meaning shipping the products off to the mainland of China, that with retail sales and other domestic consumer indicators in Australia turning higher, that the Australian economy will or could return to that, sort of virtuous self-sponsored growth where consumer spending becomes the prime driver and supports economic growth. The irony, the interesting fact there is that that's the same type of consumer-based GDP model that China has ostensibly been moving towards. Although if anyone sees any particular amount of movement, please send me an email and let me know where they found it. Because as far as statistics and as far as you can actually tell from the Chinese economy, they are as dependent on industry and export as they ever were. There does not seem to be much movement internally in China to a resource-based economy. I mean, to a consumer-based economy. So for the Australians, this would be worrisome, this entire effort here. But again, you're looking at a chart that predicts trouble, yet you can't find real trouble, at least reported in China. There are no, how would we judge a seriously incapacitated Chinese economy? It's a good question. And it's one that I'm not sure anybody knows how to answer. The statistics don't give us much insight. I've read many articles where the actual Chinese GDP is not 6.1 or 6%, it's actually 4.2, 3.9 or something like that, but there's almost no way to get a handle on that. One of the ways you can is to look at actual production sectors. How much resources is the Chinese economy consuming? For the Australian economy, as I said, this chart is a cause for serious concern. The Australian economy and its stewards in Canberra are not really in control of their own boat. If, just take a hypothetical, if Chinese workers start to demonstrate their dissatisfaction, assuming they have any, in large numbers that become noticeable to Western press, and this is certainly a possibility. Tiananmen did happen once, and it is certainly within the realm of Chinese history. Then what happens to the ordinary? What happens to the Australian dollar? What happens to the prospects of the Australian economy? This is not any type of, this is not a potential development that Australia has any control over whatsoever. It is in a position of a supplier to the mainland. And no matter how successful it's been at that role, and how many more years of success it is anticipating, it is in fact not in its control as to what happens, since the Chinese economy could very well chart its own course, inadvertently perhaps, or in opposition or uncontrollably perhaps, to the mandarins in Beijing as to what they want to happen. But in the meantime, Australia gets the benefit, which has insulated it over the past 10 years from developments in the global economy. I mean, it's rather astonishing that Australia did not have a recession around the global recession of 2008 and 2009, but it did not. So what prospects do we have here for, and let's bring it back up again, since we are primarily currency based. Here we have the commodity index again, a proxy, if you will, for, well, we can't say that. I actually started to say a proxy for the global economy, but that's not correct, actually, because we have noticed that what we need here is an explanation for the dichotomy, the split between markets and global economic reality. The Aussie, Australian dollar, is more closely tied to this than anything else. So what is the Bloomberg, the commodity index, telling us about the future of the Australian dollar? It would seem that the commodity index's predictive ability for the global economy has been compromised by resource development over the past 10 or 15 years. What do I mean by that? In the past, you would have seen, it takes a long time to bring resources online, perhaps less with fracking, at least as a recovery, but it takes a long time to bring resources, commodities online, at least industrial commodities. So you would have a relative, and with a business cycle mindset, you would have a very close correlation between commodity prices and global demand. That link hasn't completely been broken, but it has been seriously attenuated, made much weaker, because of the development and the resource development over the past, as I said, 15 years. So it isn't necessarily the case that commodity prices will be predictive of the global economic growth. But I think what you will find is that they are predictive of the Australian dollar, at least in the current state. So as long as we see a relatively stable set of commodity prices, as in 16 and into 17 right here, it is very unlikely, regardless of what the Chinese yuan does. And remember, a declining Chinese yuan is telling you the Chinese government wants and intends to keep building things and to keep producing things. And as long as that happens, the prospects are reasonably good for the Australian dollar. Okay, folks, I thank you very much for your attention today. I hope this has been useful. We will be continuing this series weekly, and we will be adding the interview show, the first one, which is on Wednesday at the same time, 10 o'clock, 2 days from now, with James Chen, the well-known analyst here in the New York, FX analyst, author of several books here in the New York area, and an old friend of mine and colleague from FX Solutions. So again, I thank you all very much for attending, and we will see, hopefully, some of you at least, on Wednesday. All of these webinars and interviews, of course, are posted at FX Street. We hope to see you on Wednesday. Everyone have a good day, and I will put my email up there if there are any, oh, and I forgot to check something. Yes, I see the comment there, Mr. O'Halloran. Thank you. That is correct. They certainly did affect the countries. There were simply fewer of them, and there were less. It was a much less organized society and culture in Australia than it was for the Maori in New Zealand. That was my only point. Again, I thank you all very much. I'll put my email up there, and we will see you hopefully on Wednesday. Take care, everyone.